Alright, so today is June 17th, 2021. It's a Thursday, and today I had a really nice, easy, stress-free, quick sell on gold. So before I talk about it, we'll just mention the fact that gold has dropped, where are we here? Gold has dropped almost 1,000 pips in 2 days, not even 2 days. So here was June 16th in the afternoon. So really, it's only done this in like 24 hours. If we measure here from when the drop happened during FOMC, we have dropped about 930 pips, almost 1,000 pips, which is insane. Yeah, so gonna have to really do some analysis tonight and figure out where I think price is gonna be going, because we've been dropping and dropping with what seems like no end. Even on the 4 hour, we barely have any retracements. Here's the FOMC. We dropped. We had one little retracement, and that was it. The rest has just been plummeting during all sessions. So, anyways, before I talk about my trade, I'll talk about FOMC quick, actually. So FOMC, I'm trying to not trade more news events, but pay attention to more news events, see how it works out, see if maybe in the future I can take trades based on news. And FOMC proved to me that either A, it's not a good idea, or B, I'm not ready yet. Because what happened here was, actually this candle wasn't FOMC, it was half an hour before the FOMC. But this was when they announced interest rates were staying the same, which is good for the US dollar, obviously. So we'll dumped. But this candle printed in, like, let's go to the 5 minute here. You can see how quickly this candle happened. If I remember correctly, the second 2 o'clock hit, this candle dropped to like here, which is a solid, yeah, exactly, pretty much 100 pips. It dropped as soon as the new hour started, and within like maybe 30 seconds, it was down here. And as you can see, over the next like 10-15 minutes, it just dumped and dumped before FOMC even started. During FOMC, it was very unsure what was going on. It did have a bit of a down push here. We pulled up, and then later on, around I think it was 4:30, we continued downwards. Anyway, so for FOMC, what really makes me nervous about these things, and what would have, I guarantee you so many people got screwed by this, is two things. So let's say you had a buy stop and a sell stop. Let's say your sell stop was here, because that would be the bottom of the 30 minute, and your buy stop was above the 30 minute. For one, I remember that this candle just before the 2 o'clock candle opened, this spiked up to here. It wasn't like this during most of the 5 minute candle. This was the last few seconds it spiked. So what would have happened here is our buy stop would have gotten activated, and then it would have dumped 100 pips after we got entered in a buy stop. And the issue with news that I've been learning is that your stop loss gets slipped. So if you get slipped 100 pips or 50 pips or whatever it is, even if you have a 10 pip stop loss, it will slip past that and take you out wherever the price jumps to. So let's say you got slipped all the way down here. You got slipped 100 pips. A little bit more on the higher side, but even 50 pips is horrible. Let's say you got slipped 100 pips, but you had a 10 pip stop loss. You would have lost 100 pips despite having a 10 pip stop loss, which is insane. Would have been like, oh my god, that would have been absolutely brutal, especially if people are over leveraging, trying to make bank off of this. That alone right there terrified me to be trading like news, especially something major like FOMC. Now the other thing is, even if you didn't have a buy stop, all you have is a sell stop, your sell stop would have gotten actually activated. Like, even if you had it here, it would have gotten activated like down in this area here, which is insane slippage. Now luckily it did continue downwards, but say you got slipped down here and it started to reject here instantly, especially with news events, it loves to push down and then immediately reject sometimes. It would have been screwed. Like, it would have been so bad. I can't imagine what some people probably lost in this situation. So this proved to me that I really, really want to stay away from this, at least for now, because the slippage is just so sketchy. Anyway, so it did continue down. I didn't decide to enter on all these because I had a winning morning. I was up like 2% or something for the day, and it was moving very, very, like, just crazy. It was. I remember that this candle pumped down, and then it went way back up here again, and then it came back down, and then it went back up, and then this started. It shot up, it shot down, it came back up. This one dumped. So I was like, you know what? I'm staying out of this. I'm not gambling here. I'm at least gonna wait till FOMC at 2:30. Anyways, that ended up happening. I didn't see any amazing opportunities, so I didn't take anything during FOMC. But there's definitely potential, but I still think it's a good idea for me not to be trading news. But I was happy I saw it. I learned stuff. I learned about how bad slippage can be sometimes, and yeah. Anyway, so let's talk about my trade from this morning real quick. Like I said, super simple. Go on the 1 hour, no, the 30 minute. There's one that looked really nice. Is it the 15? Yeah, the 15 minute and the 5 minute was the ones that looked the nicest. So right here, this market's still good. This was the monthly low. Overnight, we came down, hit here, rejected. So this was our monthly low. So I knew that if this broke, then we would have at least one good little push to make another low, even if it came back up. I'd be able to get my pips right here. This retracement was also textbook, super nice. Come on the 5 minute, it looks even nicer. So we had our push down, we had a rejection, we retraced to retest this area, to retest 1800 specifically, which is a major psychological number. Retested it, reject. We were ranging here a little bit, so what we needed to wait for was, the first thing was to wait for this resistance to form, which it did. We had our push up here, bearish close. We had another one that didn't break this low, however, it also rejected. So we needed to wait for the second confirmation, which would be this bearish candle closing below all this. Sure enough, we got the close below this low here. Now this close, the push down actually happened later on in the 15 minute candle. So it was like, I think it was like 7:25, 7:26 in the morning. So I decided I'm just gonna wait for the 30 minute to close, which you can see right here. We had, it was 7:20 when this low broke. So an entry could have been right here, but since 7:30 was so close, I wanted to wait for this 30 minute candle to close, which paid off because if you see the 7:25 candle, it came back up to do another retest of 1800, which would have screwed me if I entered before the 30 minute close. But thankfully I waited. So where's our 30 minute candle? We had a doji close here, which tells us that we got the continuation downwards, it rejected, but we also retested 1800 and it rejected. Come back to the 5 minute. So yeah, after that happened, we had this close, this another rejection confirming we are not going above 1800. It wants to continue down to at least retest this low again, and hopefully break this monthly low to give us an even bigger trade. So here was the first 5 minute candle, and at 7:30, I was waiting for this low right here to break, which is also the this 15 minute low. And next candle, we got it. We did get a little bit of wick up. Once this broke, I entered in my trade, anticipating at least 10 or 20 pips, about 20 pips, between 15 and 20 pips, to retest this area here, whether it was the bodies or the wicks, whatever. I was looking for this retest of the low, because as we know, when gold's trending, it's pretty easy to hop on the train in the direction of the trend, as long as you wait for this situation, the resistance to form, the confirmation, the lows to break. So we entered on the break of this low, came down here, and I actually was able to really hold this trade because I was planning on taking most of my profits here, anticipating that we may not break through this until later on the session, like NYSE, because gold has been moving a lot later in the session lately. NYSE Even London close has been waiting for. So yeah, it ended up just shooting past this zone before I was even able to secure profits. So I didn't end up securing profits until this candle closed way down here, which was awesome. So that was a solid 40, 50 pips, which is a beautiful, beautiful trade. At that point, I secured 90%. And yeah, that was it. It ran, and eventually, I can't remember exactly where I closed my trade. It was somewhere in this area when like this rejected or this rejected. I can't remember which one, but it was somewhere in this area that I took full profits. And yeah, it continued downwards. Again, another easy setup right here. We had it push down. We had it come back up. Resistance formed. Now we need to wait for these lows to break. We need a candle closure below this to confirm we're going down. We had this close below all of these candles, indicating that bearish volume is in the house. Safest to wait for a break below here, but entering here is fine as well, anticipating that this textbook trade will work out as it typically does. And yeah, it would have been another awesome trade. And then obviously as the session went on, it started to get a little messier. Let's see, NYSE, we had a bit of a pull back up here. This pullback up, if we look on the higher time frames at 8:30, 8:30 we did have quite a bit of a spike back up to here, which is quite the deep retracement. And I'm pretty sure that may have had to do with unemployment, because no, I'm not. I just checked. I was wrong. This doesn't have to do with unemployment, because the U.S. actually was worse than anticipated. So this was just price action. Anyways, that's pretty much it for today. We had that one nice trade, textbook trade. Makes us more confident in this exact setup here. Again, you don't hop in during this. You wait for this retracement to happen. We had support formed. It came up, formed resistance. We came down to the 5 minute. We waited for this resistance to form. We waited for a candle to close below. We ended up waiting for the 30 minute to close, and that ended up paying off. Break of this low, we were in. Awesome trade.